Well, it's day two, meeting of the minds in Washington, D.C., where China and the U.S. are in discussions right now in regard to exchange rates. They've been a very hot topic leading up to the talk. Many expect China to raise more questions about the dollar's reserve currency status. But Brendan Lothry explains why change in status would actually possibly hurt China more than it helps.
Yeah, China will likely refrain from calling for a dollar alternative for one key reason. It owns too many dollars. In other words, China holds so many dollars that it can't dump them without driving the value down of that dollar, which would create the very losses it fears. Now, data from the end of May shows China holds $800 billion of treasuries. So any dollar depreciation would put a dent in the value of those holdings. To put that into perspective, about half of all of China's foreign exchange reserves are held in dollars. UBS strategist Jeffrey Yu says it's the reason China may actually highlight plans to maintain its policy of buying treasuries at today's meeting in Washington. China must assure the market that the dollar is safe in order to preserve the value of its massive treasury portfolio. But that begs the question, why did China question the dollar's preeminence in the first place? Well, for one, the issue gives China the opportunity to assert political and financial power on the world stage. Also, China's concerned about the dollar's long-term outlook. A whopping $1 trillion budget deficit and the Fed's asset purchases have raised red flags about the dollar's direction. Now, the dollar has been declining since March, and earlier it hit the low for the year against a basket of currencies. But Tim Geithner assured China that he will rein in the U.S. deficit to preserve the value of its massive treasury holdings. Margaret.
All right. Thanks so much, Brendan Lothry. You can find the latest currency numbers and stories on our website, Bloomberg.com.